Hello everybody, this is Brandon with Crypto Trades and Tech. Sorry I'm not able to do a live stream today, so I'm just doing a quick TA update video to share my thoughts on where we're at in cryptocurrency cycles. So I just want to take a quick look around the markets here. I'm noticing the dollar is getting some strength this morning. I do notice that equities are still consolidating under this breakdown. There's other trend lines that you can draw on the S&P 500 here. It shows that it might be coming into some support, and you can see here's the daily support right there that it hit perfectly. Just draw that in. That came in at 42.70 roughly on S&P 500. So that's the support it's coming into right now. It's kind of putting in a little bit of consolidation. We'll see if it wants to break down to these lower levels or break to the upside. NASDAQ looks obviously very similar as well. Very similar pattern. Daily support around 14.5. And that's what it found support as so far. So the equities markets are consolidating. They may have a little bit more downside in them before they bounce. I'm not certain on that. Now with Bitcoin, this is a very simple diagram that I have here, just the perpetual futures. But you can see that we're into that zone of overhead supply resistance. And what I'm noticing is that the breakouts, we've had a couple of breakouts here, they're getting smaller and smaller and smaller. So we'll see what that means for Bitcoin. But as far as where we're at in the market cycle, Bitcoin dominance, of course, is doing exactly what we thought it would do. We can show that it was putting in a bottoming pattern over here. You can see this kind of very long-term, maybe the trend lines or descending wedge pattern here. Broke to the upside of that. We found support right at 40% of the total crypto market, and it's been very strongly trending upwards since then. Now, today what we have a little bit of is just a very little bit of consolidation here on Bitcoin, and I'm noticing a lot of altcoins are coming off pretty hard. For example, Elrond is coming off pretty hard. And this bottom trend line is the trend line I've been watching on the Elrond chart, for example. This would be a really good place to lean into if we can get all the way back down here. Cardano also broke down this channel that we saw here, so that's not looking too healthy in the short term. And then Ethereum broke down from this larger consolidation pattern that we were watching here. So Ethereum, no matter how you draw this, is looking like it's wanting to come back down to these lower levels. This is pretty much exactly what we anticipated. That it should be Bitcoin season for the remainder of this year. And for the sake of fitting it on the screen here, I've pulled Litecoin out to the weekly chart. And you can see this weekly support that we've got drawn in over here. We've actually made, I believe, an all-time low, or maybe other than this wick right here, on Bitcoin, or Litecoin versus Bitcoin. So if you're holding Litecoin long-term, which I don't, right? I just trade Litecoin. I was waiting for a potential bounce off of this level and a break to the upside for a nice little trade. But it's breaking down here below the prior weekly all-time high. This week's close is going to be really important for Litecoin. If we close below this level, this may signal that we're not going to get that bounce in the immediate future. We have more downside ahead of us, but we'll see. But this is not looking good. If you're a Litecoin holder, you've got some decisions to make here. That's kind of the last level of support we were watching. You lose this 30 level, this 3,000 sats level. If we were to close a daily below it, that would be the first sign of sustained weakness on Litecoin. As far as Bitcoin itself, obviously it's been on a very strong run. What I have here is overhead resistance, these two weekly resistance levels, and then this is our breakout trend line. I'm also watching on a very lower time frame, like a 4-hour time frame, this what we call the launch angle trend line. So when it first started really breaking out, we're watching this launch angle closely to see if Bitcoin's going to hold this. If it were to close below this, now we did already once close below it, and it was a fake out and went back to the upside. You see right there, I tweeted about it even. But it never closed below it on the 12-hour, interestingly enough. But this is also a 4-hour close below, and then a bounce like that. That's just a fake out move. You would need confirmation of the downside, which is what I'd highlighted on that tweet. You needed to drop back below to get a 4-hour candle coming back up into this trend line, and then another 4-hour candle to drop back below that support level that was put in there on that reversal. And so that's a support level to watch right there. But if we were to lose, so we've already lost this trend line once when drawn from this peak to that touch and through, and we're looking below it now. But I'm going to go ahead and move this out here to this outer touch, just to give us a little bit more space so that we don't get faked out. But the other support that we're watching right now is the 56,700 roughly level. This is a daily support from back over in May. Our daily resistance as well, actually. I believe we closed the daily yesterday. Yes, we closed the daily above it yesterday. And we're simply coming back in to support that little bit of daily level. But again, we have weekly resistances at 58.3. This is a 2-week resistance as well. And 59.3 was basically $60,000. My expectation would be that we would consolidate in this range between this weekly resistance of 51.7 and those two resistances. The biggest opportunities that I see right now, if we were to get above the $59,000 or $60,000 level on a daily closing basis and or a 4-hour breakout retest resumption, that would put on a nice scalp from 60,000 back up to the prior all-time high of 64,900 roughly. Otherwise, if we were to lose this trend line on this daily support level, coming back to a retrace of the 52,900 or the 51,700 weekly level are good places to consider looking to buy the dip. The reason for that, as Heath covered this morning in his update video, you see this weekly resistance was also 2-week resistance, I believe, and we closed well above that. This weekly candle was twice the move needed to overtake that. So this puts us in very bullish territory. So it's great. The start of the second half of the bull market is likely well underway. But again, we have this overhead supply, this resistance. So my expectation would be that without some sort of significant bullish news, likely we're going to need to consolidate here for a couple of weeks. One other interesting thing I want to bring to your attention. So I went this morning before I did this video and very carefully readjusted the halving dates on this chart and very carefully measured the distance between the halving and the peak price in 2013, which was 369 days. And then I went and readjusted the halving, got it right to the date, I believe. And the halving to the peak price in 2017, we measured at 525 days. And then I went and remeasured all of these areas here. So I measured, again, it was 369 days, 525 days. Looks like I'm off. Oh, it's because I'm on a 3-day chart. Okay, so 526 days was actually that measurement, 526 days here. So you can see, remember though, what happened? The market had a rolling top right around coming into the date. So the number of days from the halving to the 2013 peak was 367 days. 367 days was the 13th of May. So the market started the big sell-off right at the 13th of May. What I'm watching for with keen interest is to see how the market reacts coming into the same era, or epoch we'll call it, from the halving to the 2017 era closing, which is 526 days. So it's 526 days from the 2016 halving to the peak price that we put in on December of 2017, 526 days. So 526 days from the 2020 halving, which was the 11th of May, takes us out to the 19th of October. So I'm waiting to see if the market reacts the same this cycle as it did earlier this cycle with the 2013 era peak. Now notice this other little piece of information, 367 days. Okay, so what I've done is I've just added another line here. From the 2016 halving, I went out 367 days, which puts us right at the 10th, 11th of July right here. You can see the price action of Bitcoin coming into that area. Now, Bitcoin's always kind of dropped heavily right into, this is where it dropped into that 1618 fib that if you follow Misconfig, you'll have seen his work on that. Dropped right into that and bounced off of that. So what I'm curious to find out is if we actually get weak price action and our final fake out before liftoff right into that date, which if there are people that were measuring from halving and they were expecting a peak in the same amount of time from halving to peak this cycle, they're going to be expecting a peak in this cycle on October 19th, which is a week from now. So again, be very curious to see if we get weak price action and then perhaps one more dip and then a takeoff, or if the market does the opposite this time. The market could take off at this juncture. Now, given the size of the last two weekly candles we've had, my expectation would be that we get one more dip before resumption into month close. So nonetheless, just keep your eye out for, I guess this is back to the daily, 19th of October. Let's keep our eyes out for what price action does over the next week coming into the 19th. This is going to give us a really key data point for future market cycles to see what type of behavior these dates are going to have maybe on future market cycles. Be a really good indicator. All right, thanks everybody for watching. Again, I apologize for not being able to go live and do live Q&A today, but please consider like and subscribe, sharing this video. As always, take care.